Crypto insurance. What is it? Who needs it? How do you get it? So insurance in general provides a guarantee of compensation for any loss, damage, illness or death in return for payment of a specified premium. Crypto insurance is no different. It allows for blockchain and crypto-based businesses to acquire coverage for possible losses they can face. Recently, a decentralized finance platform, Wormhole, got hacked for $325 million. Beanstalk cryptocurrency project was robbed in April, where the hackers sent themselves $182 million. Harmony's Horizon Bridge was hacked for $100 million in June. What I'm trying to say is it's quite common to witness hacks and thefts in a world as techy as crypto. So what all does a crypto insurance cover? Number one, hacking, which eventually leads to stealing. So number two, crypto theft. According to the data on blockchain and analytics firm Chain Analysis, more than $14 billion in crypto was stolen in 2021. And number three is private keys. Some insurance providers offer end-to-end encryption and secure storage of private keys. So in case you forget it, you'll be able to recover your digital assets. Now, what it doesn't cover, because there are few losses that crypto insurance might not cover. Losses resulting from unauthorized access to your personal account. If you end up sharing sensitive information with a scammer, then that money is absolutely gone. What are the types of insurance? So let's say major types of crypto insurance that are available in the market. First is custody insurance. This helps when you lose access to your crypto keys or when business holding your assets goes out of business. Then there's DeFi insurance, that's decentralized finance for crypto insurance. This ensures smart contract failure, the base of a DeFi. And then there's crime insurance as well, which is self-explanatory. And I'll also give you some popular players' name which are there in the market. One is Nexus Mutual. It's an Ethereum-based platform that creates insurance products with community-driven management and financials. One can secure risk and potential bugs in smart contract code. And then there's Lloyd's, which is very popular in the insurance market. And in the month of February, they launched a new insurance policy to protect cryptocurrency held in online wallets against theft or other malicious hacks. We'll be opening this for discussion with our guests. We have Srijan Bhardwaj, serial entrepreneur, and then Sharad Chandra, VP Research and Strategy, Earth Idea. Very warm welcome to both. Sharad, we'll begin with you. Who needs it the most?
Everyone who is holding digital assets need crypto insurance because it's mandatory that you insure your assets. The way we insure our bank deposits. So bank deposits are insured by Deposit Credit Guarantee Insurance Corporation. It imposes a limit of 5 lakhs. Up to 5 lakhs of your deposits are insured. So in a similar way, crypto deposits or crypto assets should also be insured. And I think some of the exchanges are taking a step forward in providing custody insurance, right? For example, BitGo, one of the custody providers, is providing insurance. So I think it also safeguards users, especially first-time users who are not so well versed with how they can hold their assets, hold the keys to the assets, right? So first-time users should definitely go for crypto insurance so that they can safeguard themselves from even attacks, right? So if there's a smart contract bug, that can also be taken care of.
Okay.
Yeah.
Srijan, how does one really go for insurance? You know, general insurance, as far as that is concerned, you go to an agent or you have so many popular players in the market, you just go there and get it. How does one get crypto insurance and how does one decide which player to go for?
So when it comes to crypto insurance, it depends on the user itself, what use cases the user has. So for example, if I am very active into DeFi, I would want to go for an insurance cover which can get me all the risk mitigated with DeFi. So for example, smart contract vulnerabilities or any stablecoin depegging, which we saw with USD. And when it comes about choosing which insurance platform should we use, there are multiple platforms. So for example, Insurance is there. It's one of the biggest DeFi related platforms. Then there is Armor and other players as well. It depends on your requirements. For example, a lot of these platforms have a minimum cover. So for example, you need to buy insurance for cryptocurrencies worth $1,000 at least or $1,500 at least, which can be little too much for a lot of retail investors. In that case, you are left with limited options. And for some people, it can be about the duration. Some of these platforms don't have an active plan for all the durations at the same time. So it's about picking what fits your requirement and then choosing from it.
Now, Sharath, are there any security or systematic risks involved in crypto insurance?
One, I wouldn't call it a risk, but something, maybe a product innovation is required where maybe the underlying value of the crypto asset itself changes, right, or shoots up. And then when you lose that asset, how much of sum assured can be given back to the holder? That can be one of the challenges, right? So the insurance has to be dynamic. If the assets I'm holding, if the price goes up, right? So, and if I lose the asset then, right? So how will the losses be recovered? How will the user will be indemnified, right? So that is one major area, I would say.
Okay. Srijan, we also spoke about what all it doesn't cover. So let's say if someone is scammed, can you think of any other situation where crypto insurance won't really be able to help the investor? One is, of course, scam. And second, when you end up giving your crucial and sensitive information to someone, then, of course, that is not covered.
Yeah, exactly. And a lot of times what a lot of people make the mistake is that the same mistake which we make in our real world, that we don't read the insurance offer carefully and we don't understand what it covers and what it does not cover. So when it came about the recent USDT picking, a lot of people, they had not taken the insurance for it, but they were assuming that it would be covered under smart contract vulnerability. Versus if you see a lot of insurance providers, they have a separate column for USDT picking. So initially, every insurance platform had just one or two contracts. For example, you could take, say, against smart contract vulnerabilities, then you could take against the protocol, and then they started expanding. And as they started expanding, they also expanded the services with the literature. And if one user assumes that this cover would provide me a cover for this XYZ service as well, and it does not, in that case, a lot of people are in for a surprise, as we saw the last couple of weeks. So I would highly recommend everyone to read the entire literature of what is covered and what is not covered, and do not assume.
You reminded me of that guy who goes like, read the information brochure carefully. Very quickly.
Yeah.
is what we hear as a disclaimer at the end of every insurance ad. But what you're saying is that listen to that guy.
Absolutely.
Okay.
Can I add one more point?
Sure, Sharath. Go ahead.
Yes, what I'm saying is the way we share passwords, it's not quite novel in the Web2 world to share passwords among friends and families. And if you lose access to your funds because you are sharing your seed phrase with your friends and family, right? So I think that will also come under unauthorized access. So I think people have to be mindful about keeping their seed phrases secret and do not share even among family members to make sure that they are.
Sure, we're talking about individuals now, but let's move this conversation further and talk about companies also going for insurance. We've seen several protocols failing or falling prey to all the attacks that are quite common, or these scams or these hacks that attack protocols as a whole. So do you think companies should also look at getting an insurance cover, Sharath?
In fact, look at what happened in Ekala network, right? The one which was written Polkadot.
We're losing your audio. Srijan, would you like to take that answer, and then we'll come back to Sharath?
Sure, definitely. See, when you are acting as a custodian for people's funds, you should definitely be taking cover, because you cannot take the risk of managing other people's money without buying insurance. It's extremely risky and extremely stupid to not buy cover when you are handling other people's money, because in that case, you're not even liable for your own money, but for other investors' money. And a lot of these companies have done this, and we have seen it time and again that these companies who pay a little 5% extra per year for all the money that they're handling, in case things go south, they are able to recoup the money of their investors, and then the investors end up trusting these companies more, who get the cover.
Sure. Srijan, I had one more query. Especially in our country, crypto is an unregulated sector. How do we expect an insurance company or a platform to protect?
Right. So in this case, this is the beauty of crypto, that it's entirely borderless and it's entirely permissionless. So for an insurance provider, it does not matter which part of the world we are from. We could be in India and they could be in US, and we would still be eligible for the insurance if we have bought the right cover.
Okay.
And we would be paid in our wallet.
Quick reaction from Sharath on this. Are there any checks that one should really do before finalizing an insurance company? Because this is an unregulated sector and you have to be very careful while you go for that insurance cover.
Right. So in fact, we should look at insurance providers who are global in nature. For example, the custody services provided by BitGo. I think they have joined hands with Lloyd's Group or even Nexus Mutual for that matter, right? So insurance entities who are global in nature can easily offer insurance protection to crypto users. So we should look at entities which are global in nature.
Thank you so very much. That was a great crypto catch-up over coffee.